Hello, everyone. This is Sebastian Borgarello. I lead the consulting team for S&P Global Energy. Time in CERAWeek has been interesting, I would say, because we are in the middle of a conflict in the Middle East, and really that is taking over. That's the main topic of CERAWeek has been, okay, what's going on in the Middle East? How is that affecting our business? And a lot of you immediately, when you think about what's going on in the Middle East, think first about the Strait of Hormuz and how that is affecting the oil markets. That is most obvious, I would say, disruption, and that I would say most people know about. The other one is LNG, of course, Qatar LNG being shut down right now, no vessels going through again, creating a crisis on global gas markets. But the reality is when you start to hear the different speakers and our experts, you realize there's much more that's going on and much more disruptions are going on, and the consequences are much bigger than what you thought. And you hear the CEO of Chevron, for instance, saying that the markets are unlikely to be really pricing in the amount of disruption. If you think about the markets are reacting to this crisis, of course, with increased oil prices, increased LNG prices, but the amount of increase is even lower than when the Russia-Ukraine crisis happened. But the reality is this disruption is much bigger than the Russia-Ukraine disruption. In that case, for instance, on oil markets, at the end of the day, the oil continued flowing from Russia to just change destination and move more towards Asia, more towards China and India. In that case, less towards the West. But here you have actually flows are stopped, right? So we have significant amounts of the global supply of oil that have stopped. And the reality is not just oil flows that are stopped. You also have a lot of the critical components of the chemical supply chain that are stopped. Like they have naphtha, for instance, not flowing, and LPG not flowing from the Middle East to their markets in Asia. And that is creating problems in Asia, where some of the chemical plants over there, they had to close. And that, of course, creates also shortage of a lot of raw materials, like plastics and others. And that is a massive disruption in the market. On top of that, you have things like jet fuel that is also in short supply. So you can see the disruption is much, much bigger than was obvious. And the consequences as well, I think, will be much more than what's obvious, right? You have, of course, the short-term consequences, this gap in supply in the short term, this lack of enough supply for the market. But I think they will have also long-term consequences. You can hear from companies in private talks and conversations that the companies are already rethinking their supply chains. They're very concerned about security of supply, not just companies, but also governments. And they're trying to secure their supply. In order to be able to secure their supply, they're gonna be looking at rethinking about their partnerships, rethinking about where they're getting their supply, and diversifying their portfolio supply. That is creating also opportunities. There are countries that really would like to benefit from that and would like to secure investment in their country. We have a lot of Latin American countries. I have, for instance, in my panel, Guyana, Argentina, and Brazil, that they will definitely receive more investment because of this. But not just that, I would say the African countries are well likely to receive more investment. So again, it's creating a lot of challenges, but challenges also means opportunities. And this is what we're seeing right now. This story will continue. So we will continue following up this story, and hopefully we're going to continue the conversation with all the leaders in the market.